Hey everyone, John right here, slingshotfutures.com, and welcome to the Market Mindset, where we take a look at the psychology behind the moves today so we can better understand it tomorrow. And today, we're taking a look at the Euro currency futures. Now, there's not a whole lot going on. There's not really any news or anything going on today across the board, and actually it's a holiday in Australia. So overall, kind of a slow one expected today, but we did get some halfway decent movement. For the most part, in the morning session, we had a nice grind higher, double bottom into continuation of the upside, but then we started seeing a little bit of a problem. The same thing that happened down here, failure to break to new lows, continuing all the way up. We started seeing failure to break to new highs, right? And when they finally did break to new highs, ended up being a twin reversal and pushing back down. So a lot of times, this is an indication that we're starting to see somewhat of a range-bound environment where we make a new high, down into a new low, probably going to go back to a new high, and then from there, probably back down to a new low. Well, at this point, we're right here in this cycle, all the way up top, and we start coming in the US session, 8 o'clock Eastern, where we see the market dipping below the moving average and starting to push back down. So the anticipation is for the euro to cycle back down to the lows, where we can then look to maybe turn around and go the opposite direction. So we get an attempted push down, the sellers show up pretty aggressively, they come back up, they test the moving average, we're testing the prior high of day, and they slam lower with a very nice bear candle to kick things off, and that allows the buyers to try to come in and get trapped, right? And that adds more emphasis to the downside, knowing that buyers are trapped in, they're still trapped in, they're getting more trapped in, and now the sellers show up with some conviction, likely the buyers are going to start exiting and causing the market to fall. So the first opportunity of the day allowed the market to drive lower, but notice one thing here. Before it got too far away, it popped up one more time, tested the inside of that prior high of day, and turned right back down again. Once again, adding one more trap to the mix before the final breakdown is very common, and this allowed the market to slide even further down towards that new low. Now, once we started getting towards that new low, if we zoom back a little bit, we can see that overall low is right down here. We have one more bounce up again, another bull trap, beautiful bull bar, getting the buyers involved above and turning right back around. Another very solid selling opportunity to drive the market lower into an area of exhaustion. And this is where we went from a new low to a new high, down to a new low. And then from this area, we're anticipating the market to catch a little bit of a lift. Now, I did have an arrow here, and there could have been an arrow here and here and here. And the reason I want to talk about that area is notice every single time the market tries to come up, the sellers come in. Now, it doesn't mean it's a good signal, but the sellers are trying to defend this in hopes of continuation. They got the breakout down, they're looking for that breakout pullback, and then sell it down again. But notice what's happening. Really bad follow through, really bad follow through, bad follow through, bad follow through, bad follow through. And now the buyers just slam back up in. So this is showing us that now all of the sellers who've been trying to sell and sell and sell and sell and sell, they're likely going to begin exiting here, looking at the market to rotate back towards the highs again and thinking that, oh, maybe we are wrong. Maybe this isn't a breakout pullback. Instead, maybe this is a breakout failure, just like they had at the highs, and a continuation back to the top. So this is where the sellers start to get a little bit concerned about their previous position short, if they haven't gotten out already. So just a great example of not only a range, but just the psychology of a range. You always have those hopeful ones, right? They get the breakout, they're looking for it to continue, and then it just doesn't go over and over and over again, and eventually they're going to start giving up, and it looks like right around here is probably going to be that area where that starts to happen. So overall, a great example of a range and the psychology behind it, and of course the technicals of a range. If you have any questions about it, as always, you can send an email to the email in the bottom left here, jbrink@slingshotfutures.com. Hopefully you learned something, hopefully you found it interesting, maybe a little entertaining, and we'll see you next time.